Chief India and Indonesia Economist at HSBC, joins us right now on the show. Pranjul, great having you. Thanks so much for joining in. My question is exactly what you wrote in the note. What's next?
Yes, thank you very much for having me as always. But listen, I think we need to just take a step back and see where the economy was when the 25 plus 25 tariff was actually announced. I think we were in a backdrop in which growth was already quite uncertain. There have been a lot of changes this year. For the last few years, growth was driven more by the formal sector, large companies, high-tech industries, GCCs, drugs, mobile phone manufacturing, exports. Mass consumption had been weak. This year, all of that turned on its head. I think the formal sector started to weaken, but the informal sector was starting to strengthen on the back of lower inflation, better agriculture. So already a big shift was happening across sectors, and that was confusing a lot of people because a lot of data we get is on the formal sector. People were generally confused. Are things looking up or down? Then, on top of that, we got a lot of June data where we saw tax revenues actually weaken a little bit. We saw two-wheeler sales fall. So suddenly people were saying that, oh, even mass consumption seems to be weaker now. So there's been a lot of growth uncertainty, and the tariff announcements have happened in that backdrop. So therefore, the uncertainty element of that has been even more enhanced at this point of time. Now, coming to the tariff on its own, couple of points. If we get the 50 basis points tariff and it sort of lasts, for long, my sense is over 1 year, it could take away about 0.7 percentage points from GDP growth, which basically means that GDP growth in both FY26 and FY27 could be below 6%, in real terms. So I think the hit is significant at this point of time. Which sectors will get hit? My sense is it's mostly the small firms like garments, gems and jewelry. Not all of them listed. They will get most hit, because the truth is that there are still a lot of exempted firms from these tariffs. Still for pharmaceuticals, mobile phones, the tariff rate is not applicable, the 50%, because they are under exempted sectors so far. So the large firms may still remain a little cushioned, but I think the small firms will take the brunt of this tariff announcement. A couple of thoughts more going ahead. What can happen? Look, why did we fall into this in the first place? I think a few things changed in the last few months. One was Russian oil became a big deal at this point of time. Second, there was a general sense that India was not giving enough in the trade negotiation with the US. And I think the path ahead depends on how these two paths unfold. I think if we can show over time that our dependence on Russian oil comes off a little bit, and already I must say, we are looking at this data very carefully. Until June, we were buying about 35% of our oil from Russia, but from July, it has fallen closer to about 20%. So already the share is falling a little bit. If we can show a path that over time we'll reduce it even more, I think that could be to our benefit. And in terms of trade negotiation, if we can give a little more, maybe not give everything we are really particular about, like dairy and agriculture, but give a little more than we have given at this point of time. And I'm happy to discuss that. Then maybe, we can end up with a better deal with a tariff rate, which is much lesser than 50%. Because to be honest, 50% does hurt. Yep. So this is where I stand.
Yeah, Pranjul, absolutely agree with you, and that's bang on. 50% does hurt, and you've given your calculation for a 0.7% hit on GDP. What about the reverse, where India, in a scenario where we come off and wean off Russian crude significantly, what is the impact of that on our trade deficit, where we end up having to buy more highly priced crude for some time, and what would be the GDP impact there if you have to weigh both on balance?
Yeah, look, I think there is an economic reason why our dependence on Russian oil has actually fallen in the last month or so, because I think the discount element between Urals and Brent had actually fallen off quite a bit already, with oil prices now being lesser than $70 a barrel. So my sense is that weaning away from Russian oil over time and moving to other sources on the margin is not going to hurt our GDP growth very much, because we are already seeing that, we're weaning away. The discount is not that large anymore. So I think I'm going to just stick to that at this point of time. I just don't see a big cost of that. But taking a step back, my sense is that all eyes should now be on this whole sort of Russia, Ukraine, US sort of conversations that are going to happen in the next week or two. And if some sort of ceasefire or agreement happens there, then maybe the pressure on us to wean away from Russian oil could become a little lesser. So over the next week or two, I'm going to look at all of these geopolitical events on what really happens between Russia, Ukraine, and US in terms of the sensitivity of Russian oil. But yes, if we are forced to bring down our share on Russian oil over time, I think it can happen in a non-disruptive way.
Pranjul, let's assume all of the above were to happen. I'm trying to look inward. What can happen? I mean, can the government get off the fiscal glide path in order to give a boost? Because I remember our earlier conversation wherein you had said that FY26 is about the consumption space and not as much about capex. So can the government wean off the fiscal glide path if it needs more ammo to boost consumption? Can the RBI loosen further? Because these are, well, extraordinary circumstances, if you will.
Yeah, I'm glad you brought this up. And let me start with RBI, because I think that's very important. We had the RBI meeting last week. The market reaction to RBI meeting was that the bar for further easing from here is very high, because what the RBI ended up doing was it raised its 1 year ahead inflation and growth forecast. And a lot of people thought that, oh my God, RBI thinks growth is going to be great, 6.6% in the first quarter of FY27. Inflation is going to be pretty high at 4.9%, so which means that no more easing from here. But I'm going to disagree with this. My sense is that the bar for further easing is not very high at this point of time. If we go into the details of the forecasts and the comments made by the RBI governor, he clearly said that, look, we did not have sufficient data to bring down our GDP growth forecast. He also mentioned that May-June data on the margin has not been as strong. It's been a little bit of a mixed bag, but in a way they need to wait for more data to unfold. At this point of time, if data in the next couple of months comes out a little weaker and the trend over June is sort of followed in terms of weaker tax revenues, my sense is that the RBI will bring down its growth forecast and could cut rates if and when it's needed. So I won't say that the bar is very high. I think there is a little bit of space for more monetary policy easing at this point in the fourth quarter of this calendar year. Moving on to fiscal, my sense is that as long as oil prices, global oil prices, remain below 70 up to about $75 a barrel, remain basically between $65 and $70 a barrel, then the tax collections for the central government is going to be high because of money being made by all of these oil distribution companies. They come to the government in the form of higher dividends. What the government can then do is use this money to give some sort of subsidy to exporters. So I think we can still provide some subsidy to exporters of about 0.3% of GDP without breaking our fiscal deficit consolidation path. So the space for monetary policy and fiscal stimulus at this point is there, but a little bit, but I think it's still there. Eventually, for a multi-year impact, I think we need to get back to reforms, structural reforms. I think that will be very important at this point of time.
Yeah, and beautifully put, Pranjul. Thank you so much for speaking with us. Always great to have you on NDTV Profit.